Fala pessoal, tudo bem? A gente está aqui com o Eli. O Eli, ele é um dos fundadores da 21 Shares, tá? Que é uma das principais casas de cripto aqui do mundo, né? Que a gente admira bastante, a gente acompanha o conteúdo do cara há muito tempo, tá? A gente admira ele, acompanha ele no Twitter e tudo mais, é um cara que entende muito de cripto. A gente criou uma amizade com ele aí nos últimos eventos que a gente foi, fizemos o convite para ele vir aqui bater o papo com a gente, tá? E aí a gente vai fazer um papo muito rapidinho aqui com ele, trocar alguma ideia, fazer algumas perguntas relacionadas a cripto e basicamente compartilhar a nossa visão e a visão dele em relação ao mercado de cripto, tá? Toda a entrevista vai ser em inglês, beleza? Mas a gente vai legendar ela para que todo mundo entenda, tá? É uma entrevista que ela é gravada, tá? Ela é ao vivo, então vocês puderem mandar dúvidas aí nos comentários, a gente responde depois, tá? A gente vai ter o chat aqui para responder durante a entrevista, beleza? Vou começar a falar em inglês agora com ele, tá? E vou deixar ele se introduzir, beleza? So Eli, would you like to introduce yourself to our public?
Yeah, for sure. My name is Eli. I'm the director of research at 21 Shares. 21 Shares, we're the largest crypto exchange traded product issuer in the world. We have about $1 billion in assets under management and 30 plus products listed on prestigious European exchanges, mainly in Europe. And in the research team, we're a team of 7. We have blockchain analysts, we have quants, we have former private bankers and journalists. We're covering the entire asset class. As far as my background, before 21 Shares, I was a venture capitalist, investing in fintech and crypto companies in New York City. And before also 21 Shares, after my VC experience, I went on to work for a blockchain analytics company called Mosaic. We were conducting forensic research on the Bitcoin and Ethereum network, and I was leading the research team there. But my journey in the crypto asset industry started back almost 10 years ago as a student. I had a module on computer science and cryptography by a former Navy SEAL who actually discovered Bitcoin when he was serving in Afghanistan. And he went on to teach elliptic curve, the encryption algorithm of Bitcoin, SHA-256 to the students. So now here I am in the rabbit hole over the past almost 10 years.
Thank you so much for the opportunity for us to talk with you. And I want to start this conversation talking about 21 Shares as a whole. So, how are you seeing the crypto asset management industry right now? Like, what's the main products that the industry is developing, and what do you see that this is the path for these industries from forward?
I think overall, if you want to take a step back, the crypto industry is still in the early innings. Less than 5% of the internet population has access to crypto. So essentially, exchange traded funds or exchange traded products or an essential bridge in order to get into crypto for many investors. They don't need to open an application. They don't need to open another account. They can just use existing banks or existing brokerage account to access crypto assets. And that's exactly what we've been doing at 21 Shares for the past 4 years. We actually started with the world's first index product called HODL, as you guys know what it means. And it has been actually a tremendous success. Many investors actually today, whether it's like family offices or hedge funds or private banks, they actually want to have exposure to crypto assets without dealing with obviously custody risk, without dealing with any other issues that might be dealing with holding crypto assets by their own. So that's why, in the asset management industry, that's very important to understand how simple these products are, but also most importantly, how needed they are to have exposure to crypto assets in a diversified portfolio, whether it's 60-40, whether it's more aggressive. And that's why at the end of the day, exposure to Bitcoin, Ethereum, or even a basket is to the utmost importance, especially for the investors that are aware of crypto assets or actually want to diversify the portfolio with other asset classes. So in the end, even in this bear market, you can definitely see the interest in crypto assets as we've seen at 21 Shares with more inflows into our funds, even in the light of this bear market.
Perfect. And Eli, let me ask you something about especially about ecosystems, some chains like Ethereum and others. How do you guys see the ecosystem right now when you compare these last years, these next years? So, for example, tomorrow we're gonna see a big event in crypto, and this is gonna like change the whole industry, not just for Ethereum but for other protocols as well. So how do you guys like see the ecosystem right now in terms of like technology, but also in terms of like difference between the products? Like we have something Ethereum, we have some other products in other ecosystems. So how do you guys see the whole picture?
To be honest, it's more like my personal view than the view of the company. But here I would say that cryptocurrency is a misnomer. We all know that cryptocurrencies are not equally the same. On CoinGecko, you can see that there is 13,000 cryptocurrencies listed on the platform, but we know that they are not even serving the same value proposition. They're not trying to disrupt the same market category. And that means that essentially what we're seeing is that there is like an investment case for different products, whether it's like, for example, Uniswap, whether it's like DYDX, whether it's like obviously Ethereum and Ethereum creators. None of that, by the way, represents financial advice about some of the products that I'm talking about. But what I'm saying is that there is a specific investment case for some products, and that's the purpose of education, to make sure that this is well understood by the investors objectively, obviously, without providing financial advice, but to understand inside out how, for example, the Uniswap protocol works and how potentially this could disrupt the Nasdaq. And then thinking about Ethereum more as the app store to support the entrepreneurs to build the next generation of internet services. And there is a specific investment case for that. And there are many competitors as well to Ethereum, as Avalanche, BSC, and other networks. And interestingly, at the end of the day, we've seen almost the Cambrian explosion of all of the Ethereum competitors last year. And now we're seeing a consolidation, obviously with the collapse of Terra and Luna and the overall ecosystem. But we're definitely seeing a convergence towards many protocols, like, for example, Flax willing to actually work with Aave and other protocols on the lending market. And then we're also seeing that Binance wants to employ zero-knowledge proofs to scale blockchains to hundreds of transactions per second. So the theme around 2023 would definitely be focused on the implementations, and not just like the white papers, but the implementation of the layer twos. And we're seeing that on other protocols, and actually Binance is the best example here, as they announced last week that they're going to employ zero-knowledge proofs to actually bundle transactions and then settle them on the BSC network. And we've seen that over the past 2-3 years on Ethereum already, with companies like Arbitrum, Optimism, and even Starkware working on some variation of zero-knowledge proofs to increase the capacity, right? So I think like the fact that some of these frontier technologies are open source means that Solana or even Avalanche down the line could use these new technologies. But at the end of the day, what matters the most, especially for Ethereum competitors, is to understand how they can galvanize the community, how they can retain the community, and making sure that the innovation on top is highly differentiated compared to the benchmark, which is Ethereum, right? So at the end of the day, the best technology, especially even like in traditional finance or in tech startups, does not always win. At the end of the day, it's like how you're able to actually build a strong community with your customers. And that's exactly what we're seeing on Ethereum, because it's the largest developer community, the largest VC community, but also the largest user base as well. But we're seeing some disruption, especially on the Polygon side. As you guys know, yesterday they mentioned their partnership with Starbucks for an NFT program. And we're already seeing more contracts deployed on Polygon compared to Ethereum, which is a testament to the fact that there is a discrepancy between the price and the development that happens under the hood, especially in this bear market. So looking at the developer community, looking at the user bases, and looking also, most importantly, at the overall investment poured into the innovation are some of the most important components to understand the potential disruption here.
Yeah, I find it very interesting what you said, because we here in Mercurius, we always said that the best technology not always win. It's all about product market fit and community and other more intangible things. And I would like to see your vision about the crypto market as in a competitive dynamic view. Okay, like when we are in a market at the beginning, it's hard to understand it's going to be the dynamic of these markets. It's hard to understand things like product market fit, and
Yeah.
in the logic of the asset manager or a VC, we go into a path like more like a spread and pray. Okay, we look to the market and say, okay, that's a lot of things here. I don't know what's going to be
Yeah.
the first mover. I don't know who is going to be the winner here. So I'm going to put my money in all that stuff, and I'm gonna pray that I know that market's is going to increase. Okay, but here at Mercurius we have a kind of a different investment thesis. Okay, we understand that the crypto markets is going through a consolidation phase, like you said. Okay, and now it's a lot more clear what's its competitive advantage, what's the user base wants in a product. Okay, then it's easier, not a lot of easy, but it's easier to understand who is going to be the winner in each market and what's competitive advantage in any kind of solution. I want to understand what's your view about it, and how to analyze, how to understand the crypto markets in a view of, okay, what's competitive advantage right here, and how you do it, and how autonomous shares do it.
No, it's a fantastic question, and I agree with you that having a thesis in crypto is very important. But I think, like, from first principles, it's important to understand that even as the VC market, the crypto market is cyclical. So we have bear and bull markets. And sometimes the thesis in a bull market may not actually work in a bear market, because everything seems to work really well in a bull market. And some of the returns that we could see are actually highly impressive. But fundamentally, in a bull market, especially when we have new primitives, as we've seen, with the product market fit of DeFi primitives, the product market fit of NFTs. In a bear market, what we see is that entrepreneurs buckle down and plant the seeds for the next cycle. And it's very important to understand the mistakes of the bull market that would basically represent the opportunities for the bear market to build better versions, better features, or even completely disruptive technologies. And we've seen that, for example, with AMMs, right, where LPs are actually providing liquidity, but they have exposure to significant and permanent loss, right, because they are long to a specific direction, for example, ETH and USDC, but they don't have, for example, a market neutral strategy to cover their investments, right? So it means that basically for the next cycle, we're going to see delta neutral strategies ingrained in at the protocol level, whether it's on Uniswap or whether it would be on over DEXs. But at the end of the day, all the pain points that we're seeing in the bull market are going to be solved usually in the bear market, and they're going to see the first fruits in the next cycle. And I can give you like tons of examples like that as well going forward. And interestingly, what I think is that if you want to navigate in this asset class, it starts with education, right? And that's exactly what we've been doing at 21 Shares, is to really focus on education, focus on research, having a thesis-driven approach when it comes to product development processes, and having a close eye and a close ear with the clients to understand what they needed, what they want to diversify their traditional portfolio, right? But most importantly, we also have to have unconventional thoughts on the market to understand which narratives and which primitives are going to be the next disruptive technologies going forward. And that's why, for example, without providing financial advice, we launched the world's first Solana staking ETP in Europe, but that was way ahead of the rally of last year because of the fact that we knew that Ethereum competitors would become significant in the market. But looking again at the social layer, as I mentioned previously, is an important component to understand how a community can be gathered around a new primitives, a new network, and build the best technologies around it. And most importantly, the backing of some of the investors, also very important to improve, for example, the RPC nodes, to improve, for example, the liquidity provision, to reduce price impact on DEXs, or even to improve some of the primitives in the lending market, right? Or even like having one of the largest NFT marketplaces as we see now with FTX, right? So I think like some of the things that we're trying to do is to make sure that we balance out between early stage projects that may find quickly liquidity and market acceptance, and then obviously more mature projects that prove to be potentially the next incumbents of the vertical, right? So that's the same way, for example, if you are like a VC, you would invest in a seed or Series A startup, and then you have more the later stages startups with Series C and Series D, right? So that's exactly what we do. But at the essence of 21 shares, we launch products that comply with local jurisdictions, because obviously we have to make sure that they meet the liquidity requirements, that obviously we can have custodians accepting the cryptocurrency, and more of the other requirements to work closely with our partners and regulators. So obviously, despite the thesis, we also want to make sure that this also complies with the local jurisdiction.
Yeah, make a lot of sense, and I'm happy to hear it, because it's right, and it's likely like we think about the crypto markets. It's very close to our view at the about the crypto market. And I have just one question about this matter. That's how you see the leading protocols right now. That's like Uniswap and Aave in the DeFi market, GYDX, and some other protocols, and like ecosystem, like you said, the Polygon. How these protocols are in the matter of hearing what the user wants, okay, and be innovative, because as you said, okay, users want new features. The crypto is going to change in terms of product, and what's the main the leaders the protocols leaders right now of the market is thinking about that, and moving forward, and being continuing being innovated to give the user what the user want. How you seeing the crypto market right now?
So I think, like, despite the price developments and despite this current bear market, we're seeing significant development towards mainstream adoption, especially when it comes to give the example of Uniswap. We know that the blockchain is extremely transparent. There is no equivalent to dark pools. If you want to signal the market that you're going to buy $15 million worth of ETH on the ETH USDC pool with Uniswap V3, you will need to make sure that you can use, for example, time-weighted average price in order to basically divvy up your big size into multiple chunks, and there is a need for that, right? So we're seeing like talks around how Uniswap can improve price impact, how Uniswap can become even more like investor friendly when it comes to the token holders of the Uniswap token, whether they can actually switch the transaction fee feature for the token holders and the LPs. So these are the things that are still in the talk, and looking at the forums, looking at the Medium blogs, but most importantly the forums where we have discussions around the next features, and then governance votes as well to make sure that the proposal can get accepted. These are the best in class information that you can find on where the projects are headed towards, and most importantly where you believe that we're going to see some of the disruption here. But the only thing is that cryptocurrency is almost like startups with liquidity 24/7, right? So the price developments can be very distracting, and not actually looking into some of the fundamentals. But like, this is really impressive to see some of the Uniswap pairs to have even more liquidity than Binance, Coinbase, and FTX and other crypto exchanges within 5 years, disrupting a branch of the incumbents is actually very impressive, and we're starting to see that in other areas as well. But I think one of the major themes, especially in DeFi, would be around compliance. We've seen, obviously, with the light of Tornado Cash ban, that actually DeFi is not actually fully decentralized, especially at the front end level. And that's why, obviously, Uniswap is using TRM Labs to comply with the local jurisdictions to make sure that hackers or even other entities or persons involved with a hack do not have the opportunity to interact with the front end. But at the end of the day, the protocol itself is permissionless and can be forked away and then used for any other interface. But at the interface level, we're seeing more, compliance, especially when it comes to, blockchain forensic research using TRM labs or chain analysis. So, I think the aftermath of Tornado Cash and how eventually we're going to see better forensic research, better screening of transactions to make sure that people that use, for example, a privacy tool for good reasons and good causes would not be deplatformed would also be very important for these protocols to thrive and have a better outreach to a wider audience and a bigger target market, right? Because at the end of the day, that's what matters the most, especially as investors. You're trying to look into the target market, you're trying to look into how that technology could actually be used for day-to-day people. And I think like that's the beauty of DeFi. That's the roots of like the philosophy of the whole movement that actually started in 2017. But I think the Tornado Cash ban has been a defining moment for DeFi. I think a wake-up moment as well, very similar to what we've seen in the early days of crypto exchanges with, what happened with the, Silk Road drama and where the founder was arrested. And we've seen that as well with Tornado Cash, where one of the contributors was arrested in Amsterdam. So I think like compliance would be a very big theme for some of these primitives, including DeFi. And that's why I personally, at 21 Shares, keep a close eye on some of the regulatory developments. And that's how we divvy up the team into various functions. Some of the researchers are focusing more on DeFi, others on regulations, NFTs, layer 2s, layer 1s, layer 0s, so that holistically we have a good understanding of the asset class, and also most importantly, look into the disruptive patterns ahead of time to understand the next narratives.
Perfect. Actually, like, I would like to ask you that about the last part you said, that it's about layer 2 rollups protocols, but a little bit about like the future of the industry, because when you compare like these last cycles, we usually have like a sector that is trying to push the crypto as a whole. So we can see this with DeFi summer. We can see this this last year with out layer ones. We can see this with a shy maybe movement with GameFi, but now we are trying to understand if rollups can be like the next sector that's gonna push crypto forward. So what do you think about that, especially when you see protocols that are trying to build in a different perspective, like Polygon, like Starkware, like Arbitrum, Optimism, and others?
I think that's interesting, Brett. I think the best way to form a thesis in crypto and also in general is to use analogies, right? That's something that we like to do when we talk about rollups or even over primitives in crypto. We try to find the closest traditional company or traditional financial product to these primitives. And when you think about rollups, the best analogy, in my opinion, would be almost like a microprocessor that enables your computer to actually process transactions faster than actually is possible today, right? So there are two components of these companies trying to use rollups or zero knowledge proofs in that case. You have number one, them trying to just like be platform agnostic and enable the technology to be accessible to many layer ones. And then you have actually competitors or potential competitors to the Ethereum roadmap, where Ethereum tries to become both the settlement layer, the social layer, and the execution layer, right? And if you have like a company trying to build on top of a ZK rollup here, what you're going to find is that if they try to become an execution layer and a settlement layer, it means that they're competing against Ethereum directly as well. And they actually have to be valued differently. They have to have a wider target market. But most importantly, they need to be compared to Ethereum all the time. And that means that they need to galvanize developers, investors, and a strong community as well, right? So that's why, to me, like Rollups are interesting, but what's more interesting is the innovation built on top of rollups. If they actually try to become like the next app store or execution layer, or if actually that technology itself would be available to many other platforms, so becoming more generic, right? So I think like what would unleash the potential of rollups would be more the community and the entrepreneurs building on top than actually the team behind trying to improve the upcode, trying to improve obviously the capacity of some of these blockchain, or even improves the features of rollups themselves, right? So I think like these are two different things, and I would pay more attention to the former, so the innovation on top, than the latter of the technology itself.
Perfect. But just like to try to compare some movements, do you see any like differences but like similarities to what we saw last year with layer ones?
So definitely there is a race to which rollup is going to win. Obviously, having potentially a token or already having a token like Optimism helps to actually gather more eyeballs, gather more investors. Optimism has a token, and it has been outperforming many layer ones this year, especially since the start of the bear market, thanks to obviously the liquidity mining program that they started on Aave. But at the end of the day, there will always be a reversion to the mean towards more, healthy returns, healthy performance, and healthy increase in TVL. For example, at some point in Q3 last year, Arbitrum had an increase of like 1,000,000% in TVL last year in Q3. Yeah. That was insane. Obviously, that's because they galvanized the community, they galvanized the narrative as well. They launched timely, right? But at the end of the day, you're going to see a reversion to the mean as always. And then that's when you're going to start to see more innovation. And at the end of the day, when you think about, layer ones and layer twos, they're like app stores, right? So if you think that they're like app stores, that means that all the applications built on top should be available there. As long as there is a strong community behind it, as long as there is like a user base, right? As an entrepreneur, you want to make sure that YouTube is available on the App Store and Google Play, right? So in that case, that means that Aave, Uniswap, UIDX, etc., should be available on some of these layer twos and some of these layer one down the line, if they choose to see that there is a strong community behind it, there is a strong developer community behind it as well for the settlement layer. Because at the end of the day, as a Web3 entrepreneur, what you're looking at is the security, decentralization, and most importantly, the democratic value of the community behind the network, right? Whether it's a layer two or layer one. So that's what I'm seeing now, that at the end of the day, what matters is how many applications and differentiated applications would be built on top of a certain network compared to the other. And that would basically unlock the next cycle for new primitives for sure.
Perfect. Okay, I have a question now, Eli, that it's a question that I like to do to any crypto entrepreneur and analyst, because I want to learn with these guys what I should spend my time, and I want to understand what are you spending your time right now on crypto. What's worth time? What's spending time studying in crypto right now? What are you spending your time right now studying and investigating in the crypto market?
So right now, my focus is pretty much on the next narratives, and most importantly, reading tons of white papers, because in the bull market you get a lot distracted by new NFT jobs and obviously new liquidity mining programs, and the performance
seems good, right?
Things seems honestly sometimes ridiculous as well. But in the bear market, you have more focused time, and I think that's a quality time that any researcher, investor, or entrepreneur would need to really focus on the frontier technologies, why it makes sense, the Web3 stack, whether it's for the application layer, the use case specific blockchains like Celestia, or even more layer one, layer twos, and layer zeros. At the end of the day, it's more understanding overall like all of these new technologies, all these new primitives, or even this new research and development on MEV would impact the end users, right? So really my focus is really more on the hardcore technologies and reading more of these white papers. For example, last week I read the White House report on climate change and cryptocurrency mining, because they're definitely willing to understand how they can closely work with the Bitcoin mining industry to work out the energy disclosure, to work out some of the mitigation of water waste and noise that could impact the local communities in the US. So these are the interesting things that could impact also the regulatory landscape as well, because at the end of the day, regulatory clampdowns or regulatory frameworks would definitely impact the asset class, not just for the investors, but also for the entrepreneurs to choose where to build their business. So these are the things I'm really focusing on. So next narratives, regulatory developments, and also spending time on podcasts like this one.
Perfect. And Eli, I would like to ask you something that it's related with the event that we're gonna see tomorrow. I think our audience is going to see like this podcast next week, but this question is like universal in certain way. But after tomorrow, we're gonna see like a change of the consensus algorithm from Ethereum to proof of work to proof of stake, and after that, we're gonna see like the staking industry with like one of the pillars of crypto, especially when we see like Ethereum running on top of proof of stake algorithm. So based on that, how do you see the industry, the staking industry in general? Like just for understand a little bit, if you can see like the same movement or some similarities to like mining, for example.
Yeah, definitely. It's a fantastic question. I truly believe that we're in a defining moment now in crypto, because today the largest cryptocurrencies by market cap, Bitcoin and Ethereum, represent 60% of the market share, and they are run with a proof of work system. And now, actually, over the next 24 plus hours, we're going to see that only Bitcoin and a handful of other cryptocurrencies running on proof of work will represent close to 42% of the market share, and that's less than 50%. And in light of obviously this energy crisis that we're experiencing, especially in Europe, and also in light of more regulatory understanding of where Bitcoin mining sits against other industries, the energy consumption, the need for more data on the energy consumption of miners, to understand which assets they're using to actually mine Bitcoin. Is it fossil fuel? Is it more renewable assets like geothermal, wind, solar, or even natural gas, or very important, right? So at the end of the day, there is this narrative, number one, around energy consumption. And we know for a fact that actually the switch to proof of stake for Ethereum will reduce by 99.95% the energy consumption of Ethereum, which is great news. But then the second layer of the second order thoughts that I would have is more around security and decentralization. Of course, now more people would be able to actually validate on the Ethereum network and earn some staking yield, which is great news. That means that you and I, with our laptop or mobile phone, we're going to be able to do that, which means that there is a more wider audience to have access to the validation process, and obviously being eligible for the staking reward as they delegate their ether to a pool, or if they have 32 ether because they're a small whale, then good for them. But it's going to be very interesting to see how the narrative around this energy crisis, this microenvironment uncertainty, is going to play in favor or against proof of work mining. But again, on the back of that, I believe that more work alongside regulators, as we've seen now last week with the White House actually asking for more, work, for the energy agencies to work with Bitcoin miners, would be actually a very interesting development to see. But it's definitely a defining moment to see that Ethereum would be the largest proof of stake network, post the merge. We may see some forks because some miners wants to seek with proof of work. That I think that's another topic. But like here, we're going to see that at the end of the day, Ethereum would be the grand experiment for proof of stake, to see whether it's like decentralized enough, to see whether there is no oligarchy, forming with proof of stake, because now actually the largest whales would be actually having a strong impact on the network. But I think at the end of the day, is going to set an example to the community. But most importantly, this is the most important upgrade in history, in crypto history. That's the first time actually that we're seeing a change in consensus mechanism. And that's why it's really fun to watch. But at the end of the day, the aftermath of the merge is going to be a lot more exciting. Really a lot more exciting to see, especially after the Shanghai upgrade that should occur between 6 to 12 months after the merge, where now actually people like you and I would be able to withdraw Ether, so stake Ether from the network. And at the moment from like the moment of the merge to 6 to 12 months, no one except the validators are going to be able to actually withdraw assets. And even the validators will be limited by, I think, around 6 validators per epoch to be eligible to redeem assets. So honestly, the aftermath would be a lot more exciting. And I think that's why within 12 months, we're going to see more innovation around, especially staking assets like Lido.
Yeah, that's an interesting view, and I would like to understand your views about the proof of stake industry as a business, right? When we look at the proof of work industry right now, we see that the biggest players is like it's very concentrated, and it's players in mining industries that's listed on Nasdaq and that stuff, okay? And when we look to the proof of stake industry right now, we see it like a similar path with Ethereum, for example, widely concentrated in players like Coinbase and Kraken, and in proof of stake in staking business, staking industries that's very big as an industry. And in the other way, we have some players like Lido that's going to the other path, like to the path of the decentralization, and open the path to like a delegated proof of stake in Ethereum, right? How you think it's going to be the proof of stake industry in Ethereum, for example? It's going to be in a more decentralized way, or it's going to be like we are looking at the proof of work industry, more centralized and in big players that dominate the industry?
I think like when you see the rise of mining pool, when you see the rise of delegators on the proof of stake network, it's a testament to convenience, right? So the premise of the web in the early 1990s was everyone can run their own server. Are you guys running your own server? I don't really think so. And I think that's a testament to the fact that crypto is so early, so difficult to use, that people don't always want to run their own validator, and they prefer to just delegate on user-friendly platforms like Lido, user-friendly platforms like Coinbase and Kraken. And that's why close to 120 plus validators are actually delegating to Lido. They're working on a path to decentralization, which is great. So that means that basically you're going to have your own set of server with Lido. But that doesn't mean that, for example, because Coinbase and Kraken have a validating node, that they're not going to down the line having a path to decentralization, because Coinbase are working on a Web3 wallet, and it seems to be working pretty well at the moment right now. Not the same, pedestal to MetaMask, but nothing prevents Coinbase to actually have a path to decentralization down the line. And why not? Because I know that they're working also on their Ether staking token as well, which is actually very similar to Lido, right? So it means that down the line, even a centralized entity, because Lido is a centralized entity with angel investments and I believe VC funding, at the end of the day, they can also at some point in their S curve adopt a more decentralized product development process. But you need to be ready for that. I think like at the beginning of any startup or any protocol, centralization is very important when it comes to decision making. Right? That's why like when you look at startups, usually like past 3-4 co-founders, most of them actually fail because they actually have to always run with consensus, and it's hard to move the needle very fast, as you need to move very fast in the startup because money is very scarce and resources as well. And we're seeing that in the bootstrapping of all of these protocols, especially in the bear market where resources and investments are getting more scarce than in the bull market. You start to see that a centralization aspect around the early stages of a company or protocol very important, and then down the line having a path to decentralization. And we're seeing that as well with Flashbots, right? Enabling more private transactions to mitigate NEV on the Ethereum network. They are going towards the path of decentralization. And we're going to see that more down the line, but they need to be ready first, right? So that's why I think waiting for like 18, 24, even 48 months, or even more, sometimes like 5 years, until you can finally have a path to decentralization is because you have product market fit. And then most importantly, as a company, you also reach a point, a tipping point, where you're ready for having more, servers and validators, etc. So that's why, to me, I'm not really worried about that. I think like what's more important is that crypto paved the way for people to have financial freedom, financial empowerment. And that's exactly what staking provides, so that on your laptop, on your mobile phone, you're able to actually earn yield without buying a very expensive, mining rig. And that's the testament to the fact that it's getting to a path of more user friendliness. But again, the fact that you're seeing more validating nodes on Lido and Coinbase and Kraken and all of these like crypto exchanges is because like DEXs are not ready yet, right? Or some of the other validators are not yet trustworthy. So that's why at the end of the day, we're going to see more, more staked assets, but security would be to the utmost important, because when you have billions of dollars in TVL on Lido or any other, validating platforms, that also creates a honeypot for hackers. So mitigating all of these risks would be also to the utmost importance.
Perfect.
Okay.
Eli, actually, I wanna thank you about this interview. It was amazing. It's actually talk with someone who understands so deeply about the market, and it's outside Mercurius is very nice for us. Change some ideas and see like if you are looking for the right narratives and like the future of crypto. So I want to thank you about that, and I want to like give you some space to talk about like some thought of anything that you are seeing now in the industry that you think that's important, and not just us but like our audience should like be attention of.
Sure, that's a great question. And first, I want to say thank you guys for actually reaching out and having me here. It's a pleasure, and it's been fun. So thank you so much. And I want to say for the crypto community to keep being educated, to learn more about crypto, to not shy away from asking questions, especially on platforms like Discord or Twitter. But most importantly, don't trust but verify. The beauty of the crypto community is that we have access to on-chain data 24/7, whether it's on Etherscan or Gene Analytics. And by the way, at 21 Shares, we have our own page on Gene Analytics where we actually cover a lot of data on stablecoins, NFT marketplaces, but most importantly, also the contagion risk around what happened with Free AC and Celsius. So check out 21 Shares research on Gene Analytics. I'm sure the team will give you some data on that, and the links for our Twitter page, my Twitter page, our team's Twitter page, and most importantly, the Gene Analytics link. But also keep an eye on our next magazine, because at 21 Shares, we're publishing research on a weekly, monthly, and also quarterly basis. And on a quarterly basis, we have a magazine called The State of Crypto, and we actually provide insights into a specific topic. The first one this year was on Web3. The second one was on portfolio allocation. And the upcoming one is on valuation frameworks. So how to use traditional valuation frameworks to actually apply that to cryptocurrencies and the different type of crypto assets in order to evaluate them and find their fair value. And there is also a difference between price and value, and we make the clear distinction here in that report. So stay tuned, because it will be available next month.
Perfect.
Thank you very much, Eli. It was a pleasure. It was a really nice interview. I hope our public, our audience like it, and I hope you enjoy it too.
Yeah, I enjoy it, guys. Thank you so much. Keep up the great work.